Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Clover Health, ticker symbol CLOV. And so one of the reasons why I wanted to do a video on this is because I had previously done one and levels of support that I had drawn were pierced. And so I just wanted to follow up to clarify whether or not those levels have held up. And so in order to do that, I'm going to throw up some lines that I had previously drawn that are in yellow, as well as this shaded gap. And then I also added these two blue lines and this red line that are going to be important levels to pay attention to in the coming weeks. And then I also have these two trend lines here in purple. And so, as you can see, these three red candles all pierced below the two yellow lines that I have drawn here. And on November 9th, that day actually closed below both of those levels of support. So that does seem like it is a bearish sign, a bearish indicator of what price action could be doing moving forward. However, Friday, November 10th, as you can see right here, closed above both of those levels. And so not only is that a daily close above that, that's also the weekly close above both of those levels. So on a longer time frame, the weekly time frame, those levels are being supported. So that suggests to me that those levels are holding up. And then if we look at these blue lines that I have drawn here, one is at 88.29 cents, and that is based on the close of November 9th, which was at 88.29 cents. And then we have this touch point going back to October 30th, and then these two red candles prior to November 9th pierced through that level, as well as on November 10th, Friday, pierced below that level, but then formed this bullish hammer candle. So that seems like a good indicator for this moving forward. However, if in the coming weeks we do see a close below 88.29 cents, that could be a bearish indicator, something to be paying attention to. And then this next blue line that I have drawn here at 86 cents. I don't know if you can see it. Oh, my hand's disappearing. Right. Yeah. Oh, well, right behind my head. So that blue line is based on the lows of November 8th as well as November 10th. Both lows for those days was 86 cents. And then on November 7th, the tail of that candle pierced below that level. And so I would think that if we see a tail of a candle go below that level, that could be a bearish sign, especially if we see a close below that level. That could be a fairly bearish sign, so something to be paying attention to around 86 cents. And then this red line that I have drawn here is based on the low of November 7th, which was 82.11 cents. And so if we see a tail of a candle going below that, or especially if we see a close below that level, I would think that's definitely bearish and a good level to perhaps set a stop loss at. I'm not really sure. That's going to be up to you. But I would think if we close or go below that level, it's likely to be going lower. However, with the close on Friday being above both of these trend lines, this level of support and this diagonal trend line that I have drawn, both in yellow, that suggests to me that we are at or near the bottom and that this could be reversing, especially with this bullish hammer candle and based on these two purple trend lines that I have drawn here, one showing lower lows in the stock price, whereas this one on the RSI, the relative strength index, showing higher lows. And so that is going to be bullish divergence. And that, in my view at least, would suggest bullish moves in the coming weeks. However, of course, I could be wrong about that. So, good to make up your own mind. And then one final thing that I wanted to show with this, just taking a step back, looking at the 52-week low, which is 70.78 cents, and the 52-week high, which is $1.63. And so I'm just going to do a Fibonacci retracement based on those two levels. And so if I draw it to exactly those levels, we have the retracement here. And so 90.52 cents, that's right over here. That is the 786 for the Fibonacci retracement. And that is just about where I have this yellow trend line level of support. And so if we zoom back even more, that originates from a low on March 10th. And so while that is slightly above the close on Friday, the weekly close for the past week, I imagine that there's some wiggle room with that, and that could serve as a level of support coinciding with these other levels of support, these bullish indicators that I have outlined here. So I think that there could be some upside in the coming weeks. However, as always, I could be wrong. So good to be careful about this. But I do think that there is bullish stuff likely to come in the next couple weeks based on what I've shown. And if you've enjoyed what I've shown, make sure you like the video, comment down below to let me know your thoughts, and subscribe for more content like this. Thank you so much for watching.